ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and I have exciting guests here today. I wanted to bring Mr. King on the show here because I really enjoy speaking with him about what he's doing in Baltimore, how he's improving these inner city areas block by block, buying entire city blocks, improving them, building new construction there, making them desirable places to live. And I just love the mentality of moral capitalism, which we'll get into. I know you have your 10 commandments of spiritual capitalism. I want to hear about that, but I'm so excited to have you on the show today, King. How are we doing today?
I'm doing great. You know, I always tell folks I start my meetings off with asking the question, what's your spiritual energy number? Meaning, you know, my numero from 0 being life sucks to 10 being life is awesome. And I'm a 10.
Nice. That's awesome. It's a great attitude, man. Hey, life's all about attitude. You got to love what you're doing. You got to have a passion for it. You got to feel that passion, show that passion, support. If you want to motivate people also and make a difference in this world and, feel good about what you're doing. Also, the worst is when you meet someone and like, what do you do? And the first thing they say is like, oh, I hate what I do.
Absolutely.
Yeah. And so you definitely want to have that passion, feel that energy. That's awesome, man. Really glad to hear that. But yeah, I like your what you do in the space down there in Baltimore. It's one of those markets you don't really hear a whole lot about, although I love Baltimore. I would love to figure out how to invest wisely there. But talk to me a little bit about your background and kind of how you got started in real estate.
Well, I appreciate the opportunity to be on your show, so thank you for that, first of all. My background is I was a system engineer for pretty much 25 years of my life with Booz Allen Hamilton, and I was pretty much making quite a bit of money in my youth, 20s and 30s. And a friend of mine was doing real estate investing prior to the big boom in DC, and everyone was telling me, so I was making so much money and having any kids, that the best thing to do for tax purposes was to, buy some real estate. So a guy offered me a deal where he said, listen, he was a friend of mine. He said, I'll sell you a property. I didn't know anything about real estate at all at the time. And he said, I'll sell you a house and you don't have to pay anything out of your pocket, literally nothing out of your pocket, and I'll give you $10,000. So of course he had my interest. Wow, definitely interested in that. So I took him up on his word, trusted him, didn't get home inspection, didn't know about that process, didn't do anything. Like literally, like he said, I went to the closing table, didn't take any money with me, left with a check for $10,000. And I was happy. Until I realized that I had violated a lot of laws, not legal laws, but laws of, I would say ethical laws and these rules of real estate investing that I violated, which I became instantaneously a landlord because the house he sold me, I didn't want to live in the neighborhood. He sold me the house. The neighborhood hadn't changed yet. Still a very, I call it high energy neighborhood with people outside and a lot of activity. And so as a result, now I'm in the landlord business and I got a property. I don't know what I'm doing.
Yeah.
So I had pretty much everything that can possibly go wrong. And then he did such a horrible job on the renovation of the property because that's how he was able to take 10 grand, because this is back in 1998 and prior to the market changing and the laws changing, and his friend was an appraiser. So they were able to appraise the property to this maximum value. And he sold him that 10 grand was my equity, my closing costs and all that was the equity that he packed into that deal. So those are lessons I learned. I got put tenants in, had problems with the property. Long story short, it ended up costing me about maybe an extra $20,000 on top of that for more additional renovations, not to mention how long it took me to find tenants. So the $10,000 went away quickly. And what I learned was, I said I was never going to let that happen again. So that kind of got me to real estate, started studying it more closely, and just and that studying gave me a great appreciation for it and got me into the business.
At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Sure, sure. Yeah, I feel like everyone has that horror story, and you need to have that learning lesson. If you don't, then I don't really want to invest with you because like you haven't had your loss yet, you haven't learned the school of hard knocks,
Right.
or you're not being honest with me, right? And your true losses. So, and it's interesting. I talk to investors all the time, multiple times a day. I have hundreds of investors, hundreds of people that invest with me, and new people as well, right? We have a very robust online marketing, so I'm constantly talking with new clients. And a common question I receive, which is very reasonable, I would ask the same question to an operator, is have you ever lost money, right? Or have any of your investors ever lost money? And those are two very different questions. I say, of course, I've lost money. I've done over 300 real estate transactions. I don't have any magic wand to make sure none of them were learning lessons. But I figured out that at the end of the day, I had to limit my losses and how to pivot when we were doing something that wasn't creating a profit. And our investors, they never lost money. We always, even on our losers, we fixed and flipped over 50 properties. I'd say 48 of them did okay. I think like 3 of them, we did like 50 plus properties, 3 or 4 of them, big losers, big time. And I realized, wow, you can do well on a number of flips and you can do really badly on a few flips and they can wipe out the profits of the other flips you did and you're breaking even for the year. Now, we wrote a check to our investors, the closing table. We made sure they earned a 12% annualized cash and cash return on their investment, as was our initial target and our projections. And we want to make sure that actually happened for them. So we made sure they received a return on investment and their full investment back. We took it on the chin. We learned, hey, you know what? We're good at flipping low and mid-level houses. We're not good at flipping high-end houses. We shouldn't use our contractors that we use on low-end houses for high-end houses, even though they promised us the world, they'd be able to handle it. It came out the product is not a good product and didn't sell for the right price and so on. So we learned, don't flip high-end houses. And that kind of pushed us into apartment buildings through the years because we had those challenges there. Because we realized, wow, we have 12 projects going. We're pulling our hair out. Wow, if you have a lot of real estate flips going, you can tend to make mistakes here and there, hire the wrong contractors and maybe lose a little money. And then you got to find another deal. You're only as good as your last deal. Where buying apartment buildings, owning them long term, people consistently need a roof over their head. There's tax benefits, there's cash flow, there's equity growth, which we harvest through a cash out refinance, which is a big tax-free payout every few years. So you know what? This model is smarter. It's more of a long-term strategy. It's more scalable than flipping. We don't max out. There's not as many moving pieces. So we positioned and we pivoted our company consciously around 2019, 2018 into more of a real estate syndication to help people invest in apartment buildings and consciously slow down on flipping houses. So it's okay to lose money in real estate. In fact, all the big guys do, even small guys do. Anyone that's moving deals has a few losers here and there. And the most important thing is you got to learn from it, right? If you keep doing the same thing again and again and again, that's insanity, as Einstein says, right? And expecting a different result. But when you make a mistake, learn from it, pivot, move on, become a stronger business person on the way out. And people will respect you for that in time, quite frankly,
Absolutely. Absolutely. To your point. Now, one of the benefits for me is that DC was just, my deal came pre-boom. The gentleman selling my property, one thing he was really good at was really understanding how gentrification worked. And he saw on the horizon what was going to happen in DC. And so as a result, like I paid $149 for that house. I sold the house 6 years later for $350.
Right.
It's worth $950 now, which I
gosh.
held on to it. So the lesson I learned is, I lost some money in the short term, but time cures all wounds.
Right.
So if you can sustain that bad investment, which means, cover that monthly note, kind of damage my credit. But it was a very important lesson because it taught me a lot of things. It taught me, number one, how to make sure I go out and analyze a property. It taught me, number two, to make sure I have a good team of contractors, inspectors, home inspectors on board, folks who have more knowledge than I did in the space, who can let me know what to be mindful of, loopholes. And I think that's a lot of mistakes that a lot of people, particularly new people, don't like to do, is pay for mentors and coaching. Right. And again, I don't think you just go out here and just hire anybody who says I'm a coach, I'm a mentor. Everybody needs to be, vetted and researched and things of that nature. But at the end of the day, like any other business, anybody who's successful in business, regardless of the business, they're successful because they had a good mentor, a coach to kind of guide them. And real estate is really that landscape or the industry where if you don't have a mentor or coach, you're going to pay one way or the other. You're going to pay for your lack of knowledge and bad deals, and you learn from over time. Okay, well, now I know not to do that again. Or you can pay someone on the front end who can guide you through those landmines and say, this is how you invest properly. No, you shouldn't buy that deal, or sell it right now, or this is what you should offer as your best offer. Those kind of tips are valuable in real estate.
Sure. Absolutely. I mean, I talk to people all the time that are considering investing in our fund, and maybe they're selling. I spoke with a woman yesterday I've known for years, last week, and they're selling a piece of real estate in the Midwest, and kind of going through someone they know that's like just an investor realtor. And so this realtor brought them a buyer, the buyer didn't perform. Realtor brought them another buyer, the buyer didn't perform. Realtor brought them a third buyer. The buyer's like, I can only do seller financing, and I need a really low price, and I need a really low interest rate. I'm like, these sound like crap offers. It sounds like this realtor is not putting it on the MLS. They're just keeping it as a pocket listing, which is for residential real estate. I'm not even sure that's legal. And they need to put it on the MLS. They need to put this on the internet. Everyone needs to see it. If it's not on the internet, if it's not on the MLS, you're not getting exposure. All the realtor's doing is calling up her book of business and saying, hey, do you want a pocket listing? I can get you a discount. This seller's out of town. She doesn't even know what she's selling. I can get you a discount on it. And she's bringing in crappy investor offers. And I'm just like, you need to fire this realtor. So, that it was just so obvious what this realtor was doing. And it was such a game they were playing. And I've dealt with realtors like this. I was a realtor in this business. I've been on both sides of this table. I totally get it. And very unethical, though, and poor guidance from the realtor. And, that advice that I had given them, I don't charge anything for it, although I probably really should. It's just priceless, though. It can save people thousands of dollars. And I try to help people as I can. But it's important to actually have a mentor, not just call up someone and, in the business and kind of pick their brain. Because quite frankly, if you call up that person too many times and pick their brain, they're going to kind of stop taking your calls after a while. I've been that guy, too. Because it's like, are we doing business together? You just kind of using my experience to get, free education. So, I love the idea of a mentorship, of education, of coaching. But there are so many gurus out there, some of them I've talked to people. They're like, oh, I had money to invest in real estate. Then I went to this guru course and I ran to the back of the room and I gave them my credit card, and there wasn't enough room on my credit card. So I got another credit card because they had people there to help me raise my credit limit. Right. So like they have people at these guru events, and their job is to call up your credit card company with you, request an increase on your credit limit so you can buy the package and get into high interest debt to buy this package. And that is so ass backwards, in my opinion. But I, from my understanding, you offer a more affordable type of opportunity with the coaching and mentoring side, and you try to make it so they're not putting all their money into the cost of the coaching, and they're actually having money left over to, of course, buy the real estate, make the investments, make more money with that money. So how does your program work?
Well, first off, I'll tell folks, and this may be a term that some people would say is an oxymoron, but I don't believe the case. I'm a spiritual capitalist. And so I do business in a whole entirely different way. Like for me, I'm a capitalist in the context that I definitely want to create a product or a service and improve on the value of it and generate profit from it. But I'm a spiritual capitalist in the context that I want to create value for that. I don't want you to be satisfied with it. I want to be able to get referrals from you. I want you to be ecstatic from the experience. So in order to make that happen, I'm not going to price my coaching and mentoring service so that you can't afford to go out and invest in real estate. Like I tell people right off the bat, first question I ask is how much money do you have to invest? The person says, all I have is $2,000. Don't pay me that. Right. You need to go and get some more money because you're not going to be able to do anything with $2,000.
Yeah.
Now, what I tell folks also, be mindful of the person who's selling you luxury and success. So if someone is selling you success and not training, that's a whole different conversation. Usually when people run to the back of the room, that's what they're paying for. And the person's like, look at me, here's my cars, here's my houses, here's my lifestyle. You could have this too, here's my system. You could buy this, it'll change your life. And then people are looking for that get rich quick scheme.
Right.
Right. I tell folks, no, mine is more of a get knowledge and education over time. And then because most people are not ready to do their first investment that I meet who are new to investing for at least the first 6 months. So that's how my program really works. It's like you're gonna need to first understand economics. My pricing structure is $500 down so we can talk. I gotta make sure you're serious. I'm not wasting time. I'm not trying to make money off you. I want you to invest. I want to make money with you. That's how my program's designed. We're gonna invest together. I want you, if I'm buying a block of properties and there's 20 properties on that block of 32, I want you to buy one of those properties. Right. I want you to be a success story because if I help 20 people buy a property, then the other 20 people come after that are much more easier to join the program and we can work together because now the system works, as opposed to 20 people join a program, one person bought a house, 19 people just paid their money and retired kickers, or they wasn't really ready to invest in real estate. But that's how my program is really designed. It's a training and coaching program. If you don't take the education online classes, they're designed to be at the pace you can learn them, and then come back to me with group coaching so that we can ask some very solid questions from the content you're learning. You can go look at houses. I want to coach you through those kind of things. And if you're willing to do that and make that kind of business-minded real estate investing decision, then that's where my coaching comes into play. So it's structured to be a systematized process that really help you not only understand real estate, but more importantly, understand economics, understand social capital, understand how to go about, because again, you have to realize you're going to be a boss in the context that you are an employer hiring contractors. You're going to be hiring realtors. You're going to be hiring accountants and CPAs. And if you don't know how to interview these individuals to talk to them, then they're going to take advantage of you, or they're not going to be able to deliver the value that you're seeking because you don't know what to ask.
Right. No, I love that. And I'm listening to you here. I'm also looking at your background and really engaging with your 10 commandments of spiritual capitalism, which you touched on briefly there. And I love some of these points you have. You want to pivot over to this and kind of talk about your 10 commandments of spiritual capitalism?
Absolutely. First of all, I didn't come up with the concept. It's a gentleman by the name of Michael E. Hendren, who wrote a book called Spiritual Capitalism. And this is the gentleman who had one of the most profitable telecommunication companies in the 90s that he was able to take from $7 million up to $7.5 billion in 5 years, utilizing these principles. And so he came up with the principles. I created a graphic and I advocated because he kind of dropped off the radar, so to speak. I wish I couldn't meet him and connect with him. But what I learned about his principles, his commandments, to me, fit who I am as an individual. So basically, I'll share them with the people quickly. Number one is you define business as a spiritual experience. Right there, that kind of really sets the context of how you see business in general. It's a spiritual experience because it should be providing fulfillment to you. If all you look at is business as a way just to make money, and again, I'm not advocating you don't make money. Again, you're in business, I'm a capitalist, you're going to make money, but that should not be your primary goal. We use the analogy of electricity. A computer needs electricity, but it's not its primary goal is to generate electricity. So your primary goal as a business not should just be to generate capital, it should be able to create value, and it should uplift you. And number two, don't shrink or play small in the world. So I realized that through the years, I'm sure you experienced this buying apartment buildings, that and a lot of people don't realize this when it comes to capital raising. Believe me, it's easier, to believe it or not, to raise $5 million than it is to raise $5,000. Now, I know a lot of people look at me and say, well, how can you say something like that? Well, typically, and I say raise capital, I'm not talking about someone lending you money. I'm talking about raising capital. If you're only raising $5,000, 9 times out of 10, that's only for you. It's going to be pay a bill or a utility or something like that. And more likely, you're not going to be able to pay it back. But if you're raising $5 million, what you're doing is you're creating jobs, you're affecting impact, and then you're creating an impact, and other people can get involved. And there's so many other people beyond that. You're going to have a plan. So that's why I say it's easier in that context. So don't shrink or play small in this world is the principle number two. commandment number 2. Number 3 is debtor love and numbers will follow. And that means love is really the core of spiritual capitalism. Love the people you're doing, giving the energy of love, love what you do as a business, and do it out of love. And if you do that, money will come and money will follow. He was successful, and I've been successful living this way, attracting people to me in that position. Number 4 commandment is embrace leadership as a sacred responsibility. And what that means is you're making sure that you understand when you are a leader, you take that right seriously. You want to improve people's lives. You want to have people grow. And I look at clients of mine coming to my mentorship and coaching program. I'm a leader in that context for them. I want to make sure they benefit, they get value. It doesn't do me any benefit someone's paying me money. They don't take my course. They don't join a group coaching calls. That doesn't benefit me or them. And I give everyone back their money in 30 days, no questions asked. So to me, if you can't work the storm and really get involved, I don't really need your capital to survive as my business model.
Right. Mm-hmm.
Commandment number 5 is you want to develop a management into an art, meaning that you want to make sure that you execute well and you create value and you have systems to help you quantify and expand and grow and measure the things you need to measure. So management is an art. Number 6, empower them with ownership, meaning that everyone has to be looked at as being leaders themselves. And that's what you really want to create. You want to create leaders. As we look at the great folks who created companies through our lifetime that we've seen grow from in 10 years to billion-dollar companies, the Microsofts, the Amazons, they helped millionaires grow with them as well. So it wasn't just Jeff Bezos is the only one. Other folks came along and grew. So everyone who was involved initially, they're millionaires in those companies. Transcend to the higher level, having a growth mindset, constantly growing. We don't have all the answers now. I'm not a perfect person today. I'm going to learn more through the challenges and experiences that I go through, but I'm open to learn. I'm open to grow. Having a conversation with you. I've never purchased an apartment building, at least not more than 6 units. So I want to learn. I want to grow, transcend to the next level.
Sure.
Then number 8, don't take it all so seriously. Meaning that you don't get so wrapped up and you want to get stressed out and you want to kill folks or you want to divorce your family and you want to take it out on the dog or all these things because the business you're in is not going well. Expect it to have challenges, expect to come across obstacles, but let them grow you and you evolve as a person from that. Number 9 is count your blessings. Like I said, I start off every day with my gratitude, what I'm grateful for. And I live in that space of being grateful, not positive. I tell folks there's a difference. I'm not telling people have a positive mindset. I'm saying have a grateful mindset of your life, your health. Because think about this, and you know this, you could be working on a deal that may taking you 10 years to get this 150 unit apartment building that you want to buy that's going to be luxury down on the waterfront. And you've been working through contractors, engineers, permits, all those things. And you're so involved in it, but you wake up the morning that you're about to close on that deal and everything's about to go well and you can't see. What's going to be the most dominant thing for you right there is, why can't I see? You're not going to care about that deal anymore, right?
Yeah.
You've invested 10 years of your life in it. So be grateful for the fact you can see, you can hear, have sound mind, and just be grateful in that spirit. And then finally, the truth will set you free. That's why I tell folks, I do business with people. Give me an opportunity to get a refund if I'm not satisfied. Right. Every company I do business with, Amazon, I love them. I can, people have problems with their employee, the way they deal with their employees, but I can buy something from Amazon, which I have, tell them I'm not satisfied with it, give a little short reason. I just didn't like it. Send it back, get my money back. Costco's. So to me, being honest, having integrity in your business, that will keep you in business longer than anything else. That'll get you referrals, that'll help people want to do business with you, and then you can grow a very successful business regardless of what you do. So those are the 10 commandments of spiritual capitalism. And to me, you have to first be a spiritual capitalist. Not that you're going to adopt all 10 at the same time, but that's what the growth mindset is understanding that you're going to grow into it. And then that's kind of your indicator to keep you engaged when you have those difficulties, when your natural instincts is to do something different. These kind of keep me focused and keep me on the right path.
Yeah, I love these. I love these messages here and these points. The 10 Commandments of Spiritual Capitalism, really interesting. I never heard of this before, so really eye-opening. I'm a Christian fellow myself here, so it is nice to kind of have structure there and see kind of implement a little bit of that into capitalism here. And but it really, I like a lot of these points, which I think we want to reiterate into capitalism a little bit. I think what a lot of companies are trying to do these days is kind of virtue signal, especially big Fortune 500 companies and things like that. And you always wonder, like, what's their political motivation for doing this, and it never seems to be too heartfelt. Usually it's more like just, to whatever, get some political party donated to them. So now they're going to go with this message. But I really enjoy this message to capitalists, to business owners. Count your blessings, be grateful, don't take it all so seriously, but also the moral aspect of it, transcend to a higher level, empowering people with ownership. I think that's so important. I really try to allow people's capital group here. We work with school teachers and firefighters, police officers, doctors, lawyers, hardworking business owners and executives. And it's really nice, the whole spectrum, non-accredited and accredited investors, people self-directing $30,000 from their IRA, and people putting seven figures with us. So really fun experience to be able to help all different types of people diversify out of the stock market into real estate and build their wealth to another level that they maybe wouldn't have been able to in different asset classes. And it's just such a nice feeling to really help people that are just trying to make it here, and build some more wealth. And it's so satisfying at the end of the day, but it has to be done the right way. We're in a space, real estate, fundraising, coaching, mentoring, where there is a lot of fast talking gurus. It's kind of known for the run to the back of the room, increase your credit card limit. It's kind of unfortunately what what the industry is known for, the real estate education space, right? So I think it's more important than ever for people like you to have a moral business in this space and improve the reputation of real estate education, or any guru type of education. Here's my fancy car, here's my fancy home, here's my beautiful wife. You can have this all too if you just buy my books and CDs for $80,000. That's always I kind of entered this space in real estate when that was a big thing, and it's still a big thing. It's kind of slowed down because a lot of people smartened up to it, but man, oh man, it's so frustrating when you meet someone who said, I just spent $80,000 on a package of books and CDs. And my question to you is like, what's a good way to keep contractors honest, or something like, what? You shouldn't even have that question. You should have that all figured out. $80,000 investment in education, yeah. So, and that's like a true story. People would come to me, I invested all this money. I don't have any money now invest in real estate. And their questions are still like 101. And I'm just like, oh my gosh, where did that education get you? Really, if you don't take advantage of it, it gets you nowhere. So I like the message. I like the overall arching theme. Hopefully you're having success out there in influencing capitalism a little bit, and guiding people and mentoring them. And I want to just touch base on the Baltimore market. So I know you specialize in that market. Washington, D.C. had a big boom. Do we see a boom, or are there opportunities in Baltimore? Is it like the hidden gem we just don't know about? Is it the next Washington, D.C., right? Maybe you're getting in before the boom time. What are you seeing there?
Well, that's kind of why I moved to Baltimore. I moved up from D.C. I saw D.C. change firsthand in front of my eyes, and I was just amazed about that. So absolutely. Baltimore is a market that's tricky, though, because, again, depending on where you come in at and what's your goals. That's why I tell folks, I have 7 keys to successful real estate development. The one is strategy. What's your strategy, right? Are you buying residential properties? Are you buying commercial properties? And if you're buying commercial properties, you understand capitalization rates. You understand how to really improve these commercial properties, because if you don't, you're not going to do well.
Sure.
Residential real estate, to give you an idea of the market conditions, Baltimore has over 16,000 blighted residential properties in the city, which is why I say you can buy blocks, literally,
Right.
So you're going to get in the residential game, buying a house or two folks can do that, but I recommend if you're really going to have a business around real estate investing, you should be buying the blocks. And that's where the spiritual capitalism come into play, because see, you come in with that message, then people, the neighbors will help you. Baltimore have block captains, folks who've lived in these blocks for years, and they hear that you want to buy the property, you want to renovate the property, you want to create home ownership, then they're going to help you. They're going to tell you why the house has been vacant or when this house became vacant, and you're going to learn those situations. If you don't, you come in as a person who's just out of town. I want to buy a property. I want to put the least amount of money in it. And I want to get the most money out of it. And I want to rent it. Then you're going to have folks who, when you're doing the renovations, and people in the neighborhood know that house has been vacant for years. They see lights and activity. The minute you drive your trucks off and go home, they're going in your property. They're stealing your wiring. They're stealing your plumbing. They're stealing everything from the property. No one's going to look out for you because you're not looking out for the community. Yes. So that's where they come into play. But it's a great market. I would say it's a great market right now. And now it's not a great time to buy or sell as much, because of the fact that the interest rates are so high. We're at about 6.7%, 6.5% of mortgage rates. So you can't get as much, but it's a great time to buy. If you got liquidity and you can actually negotiate some great deals, then folks who are, and you meet a lot of people, and that's what's interesting about Baltimore City, you would meet people who own, typically, your average investor may own 5 or 6 properties. It's not just a one type deal, one owner type situation, or one property type situation. Yeah. So you can find someone that you can buy a complete portfolio from, and he can be highly motivated because he's not either A, he's been in the game too long, he's tired of renting the properties, or B, he just needs some money. And it's a great time to really get in. But it's a market that, again, this is not for the newbies who don't know what they're doing. This is a market that you have to understand who is going to be your contracting team, right? Can you walk in and assess a property, get a great understanding of what it's going to cost to do renovations? You have access to you all people capital. You have access to capital. What are your terms? Because that can blow the deal away. If the capital is too expensive, you're paying too many points on the front end, that can mess the deal up. But I believe it's always a great time to get in real estate. It just depends on the strategy that you're going to use at that time based on the market conditions. But this is definitely a good time to gobble up as many properties as you can, because what I've learned is that the DC area, and Baltimore is kind of an extension of the DC area now. It's coming north. It's growing. Population is growing.
Right.
And it's always going to need rentals. People are always going to need housing. And if you can buy a neighborhood, improve that neighborhood, not only can you get housing cheaply, but you can get help from the city, tax incentives, TIFs, things of that nature, new market tax credits to help you cut down some of the development costs. Now, those are much more longer development plans and strategies, but just getting started, depending on where people are, I think that Baltimore is a gold mine to get in, get your feet well, particularly around commercial buildings. Once you're a person who's been in the residential game for some time, this is a great market to come in. And I'll give you an example. I saw a commercial apartment building. It used to be a hotel, and it's selling for $1.5 million, 18 rooms. No, 21 units.
Nice.
$1.5 million. Sounds
like
this is a nice building. This is a nice building. This is not some crappy Section 8, excuse me for folks who may be offended by that, but this is the kind of building you look in and say, I would live there myself. And they're selling 21 units for $1.5 million. You can get some great deals.
Wow. That is a deal. I just bought a 21 unit in Bayonne, New Jersey. I didn't pay anywhere near 1.5 for it. I paid about 3.9 million for it.
Yeah.
It's outdated. Yeah.
You got to do some major renovations to that, right?
Yeah, it's not in bad shape. It's actually in good shape. It's well maintained, family owned for 40 years. Rents are like way below market value, like 35% below market value. So it's a good building. It's a great location. 3 blocks to the water, 10-minute walk to a light rail station, allows you to commute right into Manhattan. So you're paying for great location there.
Absolutely.
Yeah. So at the end of the day, it's a great investment. It's all relative, right? It's
absolutely
all what's going to appraise for after we're done renovating it and what's the rent going to command. But I love the numbers you're saying down there. I gotta say, that's a lot of real estate for $1.5 million. And as far as the East Coast goes, you're still on the East Coast, right? You're still not you're an hour drive to Washington, D.C. or less a lot of times, depending on what part of Baltimore you're in, so it can be a great location there. Also, I love downtown Baltimore. My wife and I went there to catch an Orioles game and stayed there for about 3 days or so a couple years ago before we had our son, and we really, really enjoyed it. There was a train museum we went to. I love trains.
The B&O, yes.
Yeah, man, that's a great museum. I love that. I'm a big train guy. I got a huge kick out of it. We went over to that little brewery across the way there. We really enjoyed our stay there. We went down and had dinner on the water there at the bay. Just a beautiful city, beautiful downtown area, great tourism spot, really easy to get around, affordable to go visit. I probably saved $500 than what I would have paid to go to Washington, D.C. for the weekend with my wife, so really a nice...
At least that, yeah.
At least that, right? At least, yeah. So, and just as many things to do, it really is. So, no, I really enjoy Baltimore. I think it's, for us, it's only about 4.5 hours away. So it's a nice kind of a weekend trip for a lot of New York, New Jersey residents. And so I see a lot of potential there. I was down there like 3 years ago and I was thinking, man, I got to start buying real estate down here. This is it. This is the next hot spot. And just got my infrastructure up here, though. So I'm sticking to what I know up here in North Jersey,
Well, see, that's smart. That shows unless you don't you shouldn't get into a different market without having mentors and folks that can let you know, here's what's hot, here's what's not. Now, the interesting about Baltimore, and I want to share this tip of advice to folks. I don't know if this applies to the markets you're in as well, but the sweet spot really, you get some great deals, but you got to have the liquidity to do it, is you want to be between $500,000 and $2 million. And the reason I'm saying it is because there's not a lot of competition in that space.
Really?
Because the people who could afford $500,000 previously can't because the interest rates are too high.
Sure.
And the folks who can afford it are looking at the $5 million, $7 million, $10 million deals. They're not interested in that $500,000, $2 million price range. So people who are selling properties in that price range, they got a very small pool of select people to sell to. So you can make some great deals if you're in that space because of the cost of capital right now.
Yeah. Well, it makes sense because we did a lot of deals in that space of like 500,000 to like 2 million for a while. Now we're doing like $3 to $6 million buildings, and it does make more sense to buy bigger. Bigger is better in real estate. The more units you have under one roof, the better you do, the more economies of scale you have. But no, I totally get that, and that's one of the things I like about that $500,000 to $2 million space. That can kind of be true for a lot of markets, I feel, as well. So that's a really good analysis there. So, Mr. King, how can people contact you to learn more about what you do and possibly team up with you down there?
Well, I appreciate you saying that. I would say that the best way to contact me is several ways. They can find me on Facebook at the Conscious RT Group. That's CONSCIOUSR as in round, T as in table, Conscious RT. Look for that on Facebook. You can email me directly at info or King. I'm going to give my actual email address, king@consciousrt.com. Or they can go to our website at consciousrt.com and learn more about what we're doing here in Baltimore City and the movement that we're building. Like I said, my goal is I want to own all 16,000 properties, or I want to be involved in those transactions. And I'm looking for people who are serious and want to learn the game, and that's buy them up. That's change the city for the better, and then we can grow in equity and appreciation at the same time.
Yeah. We should schedule a call, my friend. I'm curious what you got going on down there, what your capital needs are and things like that. But yeah, absolutely, man. That's awesome. That's awesome, King. I really enjoyed listening to your story here. I loved your 10 commandments of spiritual capitalism. I think it's a very positive message. I think it's a necessary message today as well. And I like what you're doing with your mentoring and coaching. It's very reasonably priced. I mean, $500 to get, a 6-week coaching course is really well priced. So really incredible stuff what you're doing, and I think you're in the right market. So keep on investing there, keep on teaching people and educating, and be sure you're in buy mode here these next few months. You might snag some great deals there. So very excited and excellent. Also for our listeners, of course, you can always connect with us at peoplescapitalgroup.com. And by the way, if you're enjoying this content, make sure you like and subscribe. We're on YouTube. We're on all the major podcast platforms. We come out with a new episode every single week. So always looking for entertaining guests and building our brands there. But you can learn more about what we do and how we help people build wealth in real estate through New Jersey apartment buildings at peoplescapitalgroup.com. Blogs and webinars and other content up there. So check it out. Thank you so much, Mr. King. Enjoy your day. Thanks for coming on the show.
Thank you, Aaron. I'm definitely going to refer folks who I know who are transitioning from owning 25 different residential properties to commercial to contact you and find out what you're doing in apartment building. I'm looking forward to your webinar you have coming up soon as well. So
Yes, sir.
definitely.
Thank you. Awesome. Awesome. All right, my friend, we'll be in touch. Good day.
Take care.